Welcome to PZFS Trading, everyone. This is going to be a lesson on smart money concepts. The basically the data range, um, the essentials to fair value gaps and breakers. Um, Also, basically breaking down how we trade support and resistance. It's not really support and resistance, okay? It's basically um okay, support and resistance is retail logic, okay? And we do not use that. I'm going to break down in this video how we use fair value gaps and the different varieties of imbalances to trade our support and resistance. You couple them with breakers and order blocks, mitigation blocks to make a strong, solid entry technique. So right here, you are looking at the US dollar currency index from March of this year. So first of all, I'm just going to start by hitting the replay button. All right, so right here at this point, you can see we was in a downtrend for quite some time until we started breaking structure to the upside. All right, so with this run up here, you took out key structural points, which was your shift in market structure. Basically changing from a bearish environment to a bullish environment. All right, so there's your shift in market structure, okay? So one thing you're gonna learn is that before the marketplace can continue in this intended direction, liquidity needs to be purged. So we have sell side liquidity here, which is always going to be resting below equal lows. Previous days, weeks, and months, highs and lows. That's where the majority of your liquidity will be resting. All right. And the importance of this is basically knowing which order block to trade from. Once price pushed up here, a lot of people think that your order block is just any random last down candle before up move. But really, it's going to be, your most solid, the most volume of the last down candle before the origin of the up move that broke structure. All right. So right here, we shifted structure. And at this point, we have a solid order block here. And you only want to pay attention to the first half of that order block. Okay. So you measure your order block. And there you go. You have the first half. We call that the mean threshold. We call it the mean threshold. That's the 50% of your order block. In the living room, man. Okay, so we can drop down to a 4-hour time frame and break this down more clearly. All right. So basically I use the 4-hour time frame the same way I use the daily time frame. So first and foremost, you want to identify your fair value gaps. And once you identify your areas of interest, all right, this gap in price right here is our fair value gap. All right. Let me go down to a 1 hour to see what it looks like. Because to be honest, guys, I really don't use the 4 hour that much. I do finesse the 4 hour every once in a while, but in my honest opinion, in my back testing, I've came to realize that the daily, the 1 hour, and the 15 minute are my favorite. That's what I use, and that's what works the best for me. Okay. All right. So here we are. Let me split this screen up so I can give you a better view of what we're looking at here. All right. So we are at January 6th, 2021. Okay. Here we are. All right. So basically, this is where we pushed up and broke structure. Let me see how this is going. Okay, there we go. All right, so I don't like how it's copying. So now we have our areas of interest right here. January 6th. Okay, so here we are, and these consecutive down close candles here on the 1 hour is what you see here. Okay, price price pushed up, created a fair value gap, and I'm going to mark that up for you. Okay, so here's your fair value gap. Let me extend that out in time because fair value gaps will be revisited. And then we have the opening to the 50% of our order block, our daily order block. Okay. And as you can see, that's what this blue shaded box is here. Now, at this point, we have two reasons to be paying attention to basically the fair value gap coupled with this order block. So anywhere within this price range, we will be looking to buy every time price gets down to there. And that would be, basically our support level, which I don't really use that word too much, but okay, so we shifted market structure. And before that, we jammed straight up and pushed straight back down. Now, notice how the bodies of the candles, all right, here's the 0%, 50%, and 100%, okay? Basically, you have your 0% signals your premium level of the fair value gap of this imbalance right here. That gap in price is what we're paying attention to, guys. The 50% is the equilibrium or consequent encroachment, 50% of the fair value gap, aka imbalance. Okay, and then we have the bottom end of the fair value gap, which would be what? Our discount level of the fair value gap. Now, you also have $90 over here, right? So this is a institutional level, a whole number, a very important number in price, okay? Once you have a big strong run up and a fair value gap that gets created, you want to be a buyer as prices coming down into this fair value gap and or order block, okay? So if we get a line right here and we extend that out, look what happened. We missed the order block. We missed it. It did not hit the order block. Why? Because the main reason we even came back down into this level was to fill in this imbalance. In the words of the famous Mark Douglas, someone in the audience asked him, "Hey, sir, what drives price? What makes price do what it does?" And he responded by saying, imbalance and liquidity. All right. That's what it's all about, guys. Now, again, note how the bodies of the candles are respecting the fair value gap. The body of the candle stopped right at the 50% here. I mean, this is a very sensitive level in price. And you also have that $90 level, like right here at the 50% of the fair value gap. Now, of course, manipulation occurs in the marketplace and we create these long wicks here, right? But they're irrelevant in my opinion, in circumstances like this anyway. Like you're always gonna have long, nonsense wicks. All right, now on a 1 hour chart, this is what we would look like. Price is fractal. I don't care what, your Wyckoff fanatics think. Price is fractal. All right. And we do not trade supply and demand. There is no such thing, right? It's not buying pressure or selling pressure. This market is 100% rigged. Okay. And it is algorithm based. It is ran off of a algorithm. And we teach you how to trade the algorithm, trade with interbank traders. All right, so here we got price pushing up, breaking structure. Okay, here you have a fair value gap. Okay, this is an imbalance in price where no orders were fulfilled to go to the downside. It was just straight buying, and they jam price up too fast and they come back down to rebalance and reprice. All right. Now, what else is right here at this level? 89.700 big figure. Now, I forgot to mention that we call this a institutional order flow entry drill. Now, what does that mean? An institutional order flow entry drill simply looks like this. When you have a big run up and then price immediately comes down to tag the fair value gap. It's the institutional order flow entry drill, and it is an area in price that you should be looking to buy from. Now, let's pay attention to this candle right here, this big white one. And we're going to extend that out in time, just to kind of highlight price. Now, what is that? Does anybody know what this is? This is what we call a mitigation block. All right, that's what we have there, is a mitigation block. Let me bring this to the front. And basically a mitigation block is going to look a little bit like this, where you have a push up, price pulls back, okay? It breaks structure, takes out the previous high, comes back down, and finds some support within that last up candle. And that will take us on up. Okay. This is what we're looking at right here. Okay. Mitigation block. Now, also about to show you what a breaker looks like, because you can easily get confused between the two. Now, a breaker is going to be something very similar to this, except for one aspect makes it different, okay? Now, in order for this to be a breaker, we have to have price run out liquidity, which is going to look like this. We're going to create a low, okay? And we're going to run out the liquidity before, as soon as you get that shift in market structure, then you have your breaker. And you want to anticipate price coming back down into the last up candle that has the most volume in it. It is also the candle that was responsible for the break, the structure break here. Okay. Now, once you have that, this is the most solid entry technique. I personally use this. And it's by far, it's my favorite entry technique. Okay. So if you have a fair value gap that is also coupled with a breaker, then I'm gonna up my risk on that. I'm gonna up my risk on it. That's how confident I am in this. Excuse me. All right, now that we have that out of the way, so technically, if price would have broke structure, this should have been your breaker here. But notice how, okay, we created relative equal lows. Okay, we made the high and we ran out liquidity. But once we pushed up here, we came all the way back down here. Okay. So what you want to see is price close above this and gain some support before coming back down into it. That's what invalidates this as a breaker. Okay, so technically you want to see it do something like this. All right, we have a low, a high, kill zone, optimal trade entry, and then we had the shift in market structure. And we close and we gain support. Now, as we come back down into our mitigation block and our fair value gap, we now have a confirmation to go long. You also have where New York opens. Okay, so note how New York opens here and we are dancing in that fair value gap. Okay, then we get a push up. New York open here. We find ourselves right back in that fair value gap before we push up. Okay. And you always want to find your higher time frame PD arrays. What is a PD array? All right. PD array is a premium and discount POIs. I know y'all know what POIs mean, points of interest. All right. So your PD arrays are going to be found on the higher time frame. So this right here, guys, would be considered as a PD array, this order block. Now this is going to be a discount array. Or a discounted array. You can add the ED at the end if you want. I just call them all PD arrays. This daily fair value gap, I call it a PD array. It's a discount array. It's a discounted area in price. Okay. All right. So let's move along. So at this point, price dives down into the fair value gap and gets a strong reaction. Okay. And it's a Friday, so it's little volume. All right. Here we have just a consolidation. So this whole week is an indecisive week, consolidation, no volume until we get here. Okay, Thursday. Another thing to note, guys, is that um let me write this down. All right, so what I'm saying here is Tuesday's London session will give you the high of the week or the low of the week 80% of the time. So you have Sunday in the yellow, Monday, Tuesday, Wednesday, Thursday, Friday. All right, so another thing, Thursdays, New York Open will give you the high of the week. All right. All this is very noteworthy stuff, guys. You have to, when you trade, you have to look at the marketplace through the perspective of the weekly candle. All right. And you must know how to break down the weekly candle and which day of the week is going to do what. Which day of the week is more than likely to give you a specific pattern. Okay. Although we did not create the high and low of the week during these times, that's why I'm telling you 75 to 80% of the time, this is going to happen. Okay. And on the days that it doesn't, then you will notice that it will happen either a day before or a day after. Okay. Like here, for example. Okay. So we created our low of the week. It was still on a Tuesday, but it was right here at midnight. Okay. Going into Wednesday. All right. So at this point, we have our accumulation, our manipulation, and our distribution and redistribution. That's basically what happened here. Now, please note how we left a fair value gap here. All right. So price did not come down into an order block. All right. It didn't come down to a 1 hour order block or a 4 hour order block. You see what I'm saying? So like it's imbalances and liquidity is what drives price, guys. So basically we get a small accumulation right here and we generate liquidity here. Now the DXY is one of the most traded currencies on the planet. So I use the DXY to help me determine where gold Euro USD, GBP USD, you know, the Aussie versus US dollar, um, US dollar versus CAD, US dollar versus Swiss franc, you know, all the US related pairs, you have to pay attention to what the DXY is doing. It's like a roadmap. It gives you good guidance on what to look for. Okay, this right here leads right back to me telling you guys that you want to wait until liquidity is purged before the market carry on with its trend. All right, so again, we push down here to consequent encroachment of our fair value gap. Again, a buy signal. As soon as price crosses the threshold of the premium level of the fair value gap, you go long here. And this is London close at noon, New York time. And you could have held all the way until, you know, London close of the next day. All right, so we're carrying on. And at this point, we need to extend our fair value gap that was created 2 weeks prior from this run up, which originally shifted the market structure to a bullish environment. All right, so again, note how that imbalance, aka fair value gap, is supporting price at this level. It's not a coincidence, guys. Okay, so we open up here and we immediately trade down to consequent encroachment, 50% of the fair value gap. Okay, so we trade up, we run out liquidity, and we push down to 50% of the hourly order block. Also, the top of the premium level of the fair value gap. Okay, we then push up, strong push up, and immediate rebalance. What are we doing here, guys? We have a fair value gap here with a order block. But one thing I need you to realize is that price did not hit this order block, okay? Because that's not what its intention was. Its intention is to come down here and fill in the fair value gap. All right, from that point forward, we push up, you know, creating relative equal highs. We come back down and start trading back around that fair value gap. Now, at this point, price does dig into this last down candle, but let me show you the relevancy of this. Note how the bodies of the candles respect the fair value gap. All right, which is the majority of the volume that is trading, that is being traded. Now, if we come up here and flip to a line chart, there you have it. Okay, so at this point, price reacted from the top of the fair value gap. And at this point, price slightly took out previous day's low, which is expected, and reacted beautifully from consequent encroachment of our fair value gap. That's the importance of it, guys. So that was this price action along in here. All right, so let's try to find where we're at real quick. Okay. Now it's not gonna let us replay on both sides, but I just wanted to show you guys where we are at. We have our fair value gap here. Okay, and we have our consequent encroachment, 50% of our fair value gap here, which I'm just gonna change up a little bit. All right, so clearly we see what ended up happening right here, but right here, we're just gonna replay it and show you what it looks like on a hourly chart. All right, so at this point, we are entering the fair value gap and we are expecting price to react. Now, when you get on this hourly chart, you start to notice a few things. Okay, we have a high and a low. And what's this low doing right here, guys? All right, it's clearing liquidity from this level. We have accumulation right here. We have sell side liquidity resting below this low and these relative equal lows here. Okay, as well as right here. So this whole rundown is a run on liquidity. Therefore, you come over and you find your breaker, which is the last up candle with the most volume in it. Okay, you want to pay attention to the high to at least the 50%. All right, we're going to extend that out in time. We're going to slow this down a little bit. And we're going to run it. Just go back and watch how price reacts to these levels. Right? So you have fair value gap here. Price digs up in it. Okay, so remember, this is consequent encroachment, and this is our breaker. All right, so here we are with a new week. All right, so there we go, right there, guys. This is what we call a bullish breaker. All right, plus I'm just going to put CE for short, but that's consequent encroachment, which is 50% of our fair value gap. Now, coincidence, guys? Is this a coincidence? Let's go back to a full chart and see the setup, right? These two blue lines are your daily fair value gap. This is 50% of that daily fair value gap. And we also have a breaker here. And we have another fair value gap, which will be located from the high of that order block to the low of that candle there. This is a fair value gap, but we also name this signature and price a big long candle. It's called a BISI, and what a BISI represents is buy side imbalance, sell side inefficiency. So this would be called basically a BISI in the form of a fair value gap, or fair value gap in the form of a BISI, however you want to put it. Baby, Kaylee Moore said call her ASAP. On that post, yeah. All right, so let's have a look at this on the 4-hour, for example. All right. So a breaker here and the imbalance. Did it touch an order block? No. Okay, so let's have a look at it on the daily. Fair value gap. 50% of that big imbalance. Boom, buy signal. Let's have a look at it on the weekly. Now your weekly is going to be the most solid setup, okay? And this is what we have here. Our let me fix this real quick. All right, so our fair value gap would be from this candle's high to this candle's low. Now, you want to be a buyer as price is coming down into this gap. As soon as it takes out previous week's low, you can expect a reaction once it clears liquidity and digs into the imbalance. It might be a little messy, but there you go. Go back to a 1 hour. And let's throw our time-based indicators on here and understand that this right here is high impact news. All right. So price literally fell a significant amount of pips. Now, see, if you would have been down here waiting, then you could have been on the right side of the marketplace during high impact news. All right, so we're gonna keep pushing, keep pushing. I mean, from this point, guys, I mean, we literally take off. Like, this is what I'm trying to get you guys to realize, that these higher time frame areas of interest play a significant role in identifying the true trend of the marketplace. Now, I'm about to delete all of this. And I'm gonna cut it short right now, guys. I'm about to go eat dinner and take my dogs for a walk. So yeah, it's Saturday. So I'm really just doing this during my spare time. Just want to go over a few things with you guys, but I'm gonna get back with you and touch base. I have a lot more stuff to talk about, have a lot more stuff to teach you guys, and I'm sure you'll love it. All right, y'all, be blessed, have a safe weekend, and take notes.